So our talk today would be mostly to do with what can an accountant do without a license. Now, a lot of accountants have decided not to get their own licenses. I'm going to talk a little bit about what it means to get your own license after 1st of July 2016 and what it takes, what it'll cost and things like that. So let's talk about the game till now, what has been happening till now. Um, uh, there's some issues which ASIC and ATO had, and they were concerned about what is happening in the marketplace. The first thing was the cost of self-managed super funds. What was happening is there were lots of players in the market who were actually putting up a very low price. Sometimes the setup was free, but they were trying to make money in providing other services like getting commissions um, from term deposits or a broker account or even selling properties to them. So the cost was not only to set up the super fund, but it was also in administering the funds. So ASIC was quite concerned and they wanted to regulate all of the whole industry as such. And the tax office was quite concerned that the super funds were being established because they being the regulator, they were being established with very low account balances. And if you look at the ATO website, they will tell you that about 7% of all super funds have balances of less than $50,000. Now 7% is a very low figure, but if you put it into perspective, if you have say 600,000 funds, you're talking about 30 to 40,000 funds which have been set up with very low balance. Now, what has happened is in 2013, the legislation went through and the regulation 7.1.29A of the corporation regulations has repealed. Now, what that means is that the accountant had certain exemptions. They were able to talk to clients about certain things, and we're going to talk about those certain things in detail. But let's just try and understand what is this financial product advice means. Basically, it's a recommendation or a statement of opinion that is provided with the intention of influencing a person's decision. So what ASIC and ATO want to do is they want to restrict the accountant from making these statements so that they are able to influence prospective trustees, persons who would become trustees in the future. Now, what is financial advice? Am I giving financial advice? So first thing is to consider what you are saying to people, what you are doing, what you are actually, your actions and your activities. So if you carry on certain activities, that is advising or dealing in certain financial products, including securities, you would be providing financial advice. And am I giving financial product advice? Basically, financial product advice is that if there is a financial product and you're making a statement, you're making a recommendation or a statement of opinion or a report of either one of these things, that is, it is intended to influence a person. So you could say that a self-managed super fund will give you a better result. Now, when you make such a statement, the other person will get influenced, or the intention of making that statement is to influence another person, and he believes in your statement because you are the accountant and you are aware of that financial product. So literally, if you make those kind of statements and you form those kind of opinions and you recommend someone to purchase a financial product or to invest in a certain financial product, you would be considered um, advising people to become trustees of self-managed super funds. Now, some people may not have the intention, so it is what they say is in the legislation it is drafted that it could reasonably be regarded as being intended to create such an influence. Now, let's just get on with the legislation and see where the restriction is. it's in section 766A. When does a person provide a financial advice? A person provides financial advice if they provide financial product advice, which we discussed. Deal in a financial product. So if you are buying and selling, so if you are recommending, let's say, a property to a self-managed super fund client, then you would be considered as dealing in a financial product. But if you are recommending property to a person who's not a trustee of a self-managed super fund, that would not be considered as a financial product. Now, if you're trying to make a market, operate a registered scheme, all those situations would mean that you are basically providing a financial service. Now, what you need to look at is section 766A to B, because what the Act does is it says that we are going to have a regulation about this section, and the regulation I'm going to show you just now in the next slide, and it talks about the section 76A to B talks about the regulations which have been set in circumstances which are for the persons they will be considered to be taken to provide that advice, or taken not to provide that advice. So the regulations are very clear in what is a financial advice and what is not a financial advice. So let's get on with this, but you must appreciate that from 1st of July 2016, an accountant giving financial advice to any person must be licensed to provide this advice, must act in the best interest of the client, and he must give, and that's the new regulation 175.214, that he must give priority to the interest of the trustee. Now, the interest of the trustee, there are a lot of obligations, like what is a interest, of the client, and whether you have actually done a full fact find. Have you really found out what does the client want? So, and there are certain obligations which a client, which the accountant has, which has to be fulfilled. But I'm not saying, and neither is the tax office saying, neither is ASIC saying that a low balance does not really mean that you can't have a self-managed super fund. There's no legislated minimum. You can have any amount in your superannuation interest, and you may want to manage and control your money. So there's no restriction. But the point is that the source of that advice is what is being restricted. So the legislation, the I'm just going back, the section which I'm just going one more back. The section is 766A to B, and they talk about the regulation which has been set up, and the regulation which has been set up is regulation 7.1.29. Now, if you're worried about these slides, I will email them to anyone who requests me to send them one. So don't worry about making notes or making points on what I'm uh, going to discuss today. But these slides can be emailed to you. That's not a problem. We are also recording this presentation, and they will be up on Trustdeed website very soon. You will get some CPD points, and we have to send it across to the Financial Planning Association, and they assess it. We are hoping that we'll get 1 hour for today. So the Corporation Regulation 7.1.29, it talks about circumstances where the person is taken not to provide a financial services or task. Now, the paragraph 776(2)(b) talks about a person who provides eligible service is taken not to provide a financial service. Now, there are certain services which are eligible and certain services which are exempt. So I'm going to discuss what are those eligible services and what are those exempt services. But the person should be, related to their accounting or their business. He should be an advisor to the client. So you cannot like discuss it openly, or if you make a statement, say in a seminar, that may not be considered because you're not giving advice to a retail client. So it is basically we're talking about one-to-one advice or a small group of people who you are related to, and you are quite aware of their accounting and tax situation and their business situation. And we're talking about advice which is given uh, because you are actually providing them an existing service. So what we need to do is we need to find out what are the eligible services and what are exempt services. Now, just to going backwards, the section 76A talks about all the eligible services. That is, if you're providing financial product advice, if you're dealing in financial product or making a market for the financial product. So these being all the eligible services, so which are quite in set in stone in 766A, but the ones which are exempt are in the regulation, and that is in 766 2B. So I'm now going forward and I'm talking about the exempt services which are in the regulation 7.1.293. I'm going to talk about three subsections, subsection 3, subsection 4, and subsection 5. Now, 3A talks about audit. So if you are going to be an auditor, that would be considered as a exempt services, and you will not require AFSL. Now, you can, as an advisor, talk on risk, and the other person who you're talking to should be able to identify that you're talking about just a generic financial product. You're not talking about a class of product, and you can definitely not talk about how much insurance they need, but you can talk about that once you have a self-manager. So you can have this conversation with your client and say to them that yes, when you have your self-managed super fund, you won't have life insurance. uh, you would need life insurance because of your certain situation, and the client may ask you how much insurance do I need. Then you have to tell him that look, I'm not licensed to provide you that advice, and I cannot give you that advice, and you must go to someone who is licensed. So this is where you need to draw the line and clearly what type of insurance and how much insurance they should hold. Now, the interesting part is setups. Regulation 3F and G, they talk about. I'm going to read them because they're very, very important. Uh, when you arrange for another person, or you're engaged in if you're engaged by a trustee to in relation of an interest in a self-managed super fund in the circumstances in 5B and C of this section, you are basically following instructions. You're arranging for, and G, you're arranging for another person, or you engage in conduct and refer to section 76(1) by preparing a document or registration or transfer in order to complete an administrative task on instructions from that person. So what the regulations are talking about out here is that if you get a client and the client tells you that can you please set up a super fund, literally you are not giving any financial advice whether that person requires a self-managed super fund or not, but because you have not recommended a self-managed super fund, you are basically following instructions. You're filling up the documents, you're ordering for ABN, you're applying for tax file numbers and things like that, you're completing the forms, and the client might even ask you to organize his rollover, say from AMP or MLC, from his existing super funds to your self-managed. So basically, you're just following his advice. But you should be very careful that you can tell him that you can lose insurance if you withdraw from an existing super fund, but you cannot tell him that you should get insurance before you move money in. So that's a very, very a gray area. So let's say the client comes in and says, here's my 200,000 in AMP, can you please roll it over? At that point of time you should say, if I roll it over, you will not have life insurance, but at the same time, you cannot say, I can organize life insurance for you, because you don't have an AFSL. But obviously, if you have referral partners, if you have a partner who's a license holder, or if you have a referral arrangement with another person who is an authorized representative of a AFSL holder, then obviously you can recommend that, okay, you can go and talk to this person and organize your insurance before you roll out all your money. But you cannot recommend them to get life insurance, and definitely not get any commissions out of it. So if you're acting on instructions, you can prepare these forms, you can transfer assets between parties, you can even organize off-market share transfers for them. If they have property, let's say commercial property, you can get it valued by them, by independent valuer, and you can organize transfer of those assets into a self-managed super fund. So there's no restrictions on setting up super funds per se. Now, the subsection 4, the regulation talks about if a person provides an exempt service, is advising another person on taxation issues. Now, the taxation implications could be many. Let's say for pensions, they could be on how much tax they will pay at individual level. So you can talk about all of that. But when you're making these kind of comments, you should not be seen to be selling a product. You're not selling the pension. You're just telling him the taxation benefit, the taxation implication the person will get involved with, and just be very careful on having these conversations with the client, because it sometimes could cross the line, and you could say that if you have insurance in your super, it could be tax deductible, and when you go into pension phase, because you're not paying tax. So you're not suggesting to them that once you go on pension phase, there is no need to have insurance in a self-managed super fund, because that is not deductible anymore. So you have to be very, very careful on what sort of discussions you have, and whatever discussions you should have, you should make sure that you're not getting paid for it. And all these three clauses have and. So the person who provides another person on taxation advice, including the advice in relation to the taxation implication, and the person will not receive a benefit. And if you are going to receive a benefit, you must mention it that there is a referral arrangement in place, and that referral arrangement is going to pay me that money. So uh, when you provide that financial advice to a retail client, that advice, if it includes financial product advice to that retail client, and the statement should be in writing, and it must say that you're not licensed. It should be very, very clear in your communication to the client that you are only providing taxation advice only, and the taxation part of that product. And so if you're going to make a decision, I'm going to only talk about only the taxation implication of that product. So whether you should go in transition to retirement or pension or not, that choice is ultimately yours. But if you do go into it, then this is your taxation implication. This is how much tax you will have to pay. And if you don't go, how much tax you will have to pay. But whether you should go or not, that decision has to be left with the client or with someone who has a license. So certain disclaimers have to be put in writing. Now, you can charge a fee for talking about taxation issues. You can charge a fee because you're sitting down with the client. You can charge whether the investment should be in cash or shares or property. You can discuss those kind of things, but you should not influence the client to buy shares, say for example, because that would be a broader class of asset. But if you do talk about shares, you can still talk about broader class of shares. Say you can say that you can buy shares, say internet shares or IT shares, or you can say banking shares, but you can't say Commonwealth Bank shares, or you can't say NAB or Westpac or one particular share, because that would be considered as a statement of advice to influence someone. Now, the tax benefits of using CGT concessions, again, you can talk about those because there'll be a lot of your clients who would be thinking of retiring, and there's a lot of talk about whether the contribution on retirement would be considered as non-concessional or not, and most likely it will not be. So there is a limitation of that 500,000. So there is an opportunity for small business people to actually contribute certain assets above the $500,000. So you can talk about the implications there. You can talk about the consequences of share buyback. So let's say a client comes to you with a with a current holding in an asset, and you can talk about, whether if you're on pension, whether you'll get a very high franked amount or not. But you can make these kind of conversation, but it should be very, very clear that you have provided a disclaimer, and that disclaimer must be in writing. So you need to get something organized on your letterhead or something like that. um, but please, when you give them some investment advice, let's say cash or shares, you should not try and compare one type of investment with another type. And especially, you can say that yes, cash gives you certain kind of interest, dividends give you certain kind of dividend rate of return, or property will give you certain rate of return. That is fine. You can say that you will get certain rate of returns, but you can't say that property is better than shares, or shares is better than cash, or cash is better than shares. So comparing from one type of investment is superior to another investment is a total no-no. So you cannot do that. Now, you can do that outside of self-managed super fund clients, but what we're talking about today is only in situations where we have a self-managed super fund client. Now, you definitely cannot talk about retirement planning or estate planning, recontribution strategies. All this is a total no-no. Now, as far as the disclaimer is concerned, if you looked at the previous slide, I'll just go back on 71294C2, and the disclaimer is provided, which is here: the advice constitutes financial product advice to retail client. It includes or is un, or is accompanied by a written statement, and these are the 3 points. The person providing the advice is not licensed to provide that financial advice, so you have to write that statement. Taxation is only one of the matters must be considered when making a decision of a financial product. So you must actually have certain paragraphs included in your advice, which you are going to write to the client. Now, I believe you would put those things, because if you're going to charge a fee, you're going to put those things in your invoice so that it is evident that you did get paid and you made sure the client was aware of that. Okay, now the next is the subsection 5. Subsection 5 talks about a person can provide an exempt service, and in relation to establishment, operation, or structure, or valuation of superannuation fund and other advice uh, for inclusion in exempt document or written statement, and the person is advised is likely to become a trustee or a director or employer. So we're talking about situations where a person comes to you and he says, I want to set up a self-managed super fund. So, so what you need to do is you need to, in point number C, in 5C, you'll say you can only discuss where it is necessary for you to talk about compliance with the SIS Act. So if you go beyond the necessary items, well, you can talk about in-house assets. You can talk about what will happen if you lend money to relatives and things like that. So you can talk about investment restrictions to the client, but you cannot go anything which is beyond the compliance necessary, which is necessary for the client. So you don't have to talk about acquisition or disposal of superannuation fund, like you should transfer your assets and what class of products, and you should not recommend or acquire any superannuation product. You should not say to them that you should, I think you should set up a self-managed super fund. But you can tell a client that if you set up a super fund, these are the things which you will need to do. But uh, in that discussion, you should not try and influence that person to set up a super fund. But you can tell them that these are the rules: section 62, sole purpose test, you can't withdraw the money; section 109, yes, you can buy a commercial property, you can lease it to yourself. So you're talking about anything and everything to do with SIS Act and the restrictions placed to the trustees in the SIS Act. Now, when you're providing this kind of advice, you should always have a written statement that I'm not a financial planner. So in subsection D, it talks about the advice which is being given now one-to-one to the client. The person providing the advice is not licensed. You must make it very, very clear that I'm not licensed, and that should be the first thing. And I would suggest that if anybody starts this conversation with you, you first of all have a pre-prepared paper and you get them to sign it, that before you even open your mouth. And what you should say is, I'm not licensed. I'm going to give you only SIS Act advice under regulation 71.29. You can even mention this subsection, and I'm not going to go beyond this advice, and I'm not going to give you any product advice. I'm not going to recommend you. And you agree that the conversation is going to be just to do with the discussion to do with SIS Acts and the restrictions in the SIS Act. Now, I've got certain requests from some of the attendees to send the slides to you. That's no problem. If you can, please, in your question box, if you can just enter the email ID, then I would send these slides to you. That's not a problem. Okay, now to understand the subsection 5, I've just given you certain examples here. So the accountants can provide advice and factual information about SIX Act, about investment restrictions, where you can invest. Can you invest in a private company? Can you buy a residential property and live in it? Can it pay your home loan? Things like that. These are the restrictions which are in SIS Act. So what about collectibles? Can you buy a car or can you buy a painting? And then all you're doing is you're basically telling them what is SIS Act, and this is what the SIS Act says, and this is what you can do if you set up a super fund. But you cannot recommend, and this is where I make it very, very clear, you cannot recommend any particular asset, and that's that, because it's a super fund and that asset becomes a financial product. And you cannot recommend any investment strategy. You can't say, oh, you should have only say commercial property in your self-managed super fund. That would be going beyond your license, beyond your regulation 7.1295 exemption. You can tell them the tax effect of pensions, but you cannot tell them how much pension they should take. You cannot tell them that. You can tell them that the 4% is the minimum amount under the age of 65, but that's where you should stop. You should not say that you should withdraw more or less, but you can say if you withdraw less, you will be breaching the SIS Act. Now, you cannot even recommend rollover from another super fund to a self-managed super fund. That again will not be allowed. But whatever you're allowed to do out here, again the disclaimer. I'm just going back, and I'm going to talk about the disclaimer in D. So you should provide that I'm not licensed, and the license. I mean, if you are asking for certain situation, then you have to go to a person who's got a license before you make a decision. So just be very careful about this part 2 of D. So 7.1295 D2. So the client should consider taking advice. So you must tell the client that I think you should go to someone who's got a license. It should be made very clear that I'm not a license holder, and before you make a decision, please go to someone. So that is very important, and I think it should be on your websites as well, because I'm going to talk about what you can do, the solution to this whole problem or the whole situation. So the advice provided must come with a disclaimer in the form which I've provided to you. Right, now other regulations which you should be looking at is, now this is the broad class of broad class of assets advice. That's regulation 7.133A, and this is the allocation of funds available for investment. So a person is not taken to provide financial advice within the meaning of 766A1 of the Act if the provision of a service that consists only of a recommendation. So what you're doing is you're only saying only a recommendation or a statement of opinion provided to a person about the allocation of assets. So just we'll talk about broad class of assets. So just going backwards, so you can talk about what is a share, or you're just talking very generally. What is a share? What is a debenture? What is a deposit, like a fixed deposit? What is a managed investment product? What is a life insurance product? You're talking generally, and these the regulation, they don't apply that you're recommending any one of them, but it's just a broad class of products. So you're just talking about a very, open-ended conversation. You're just saying that if you put money in a bank, you get a term deposit. It's a broad class of shares. You can buy shares in the stock exchange in Australian or overseas or whatever. So you're talking about the risk and return, and you're just telling them the characteristic of the product. But you're not talking about the type of investment, and you're not definitely telling them that you should have a term deposit, or you should have a managed fund, or you should have shares or whatever. So you're just basically talking about the broad category in 7.33A. Now, you should be very, very clear that that whatever you talk about to them, it's not advice. So you must tell them it's not advice, and it's definitely not any product advice. And you're not telling them to recommend. You're not whatever you say, you must tell them clearly, and this is a part of your disclaimer that whatever I say should not be construed as a recommendation of a particular asset class. So I'm not so so let's say if I have a 10-minute conversation with you, and I out of the 10 minutes, if I talk 7 minutes about commercial property, it does not mean that you should buy commercial property because I'm talking a lot about commercial property. So it's a very general conversation. And talking about commercial property doesn't, it's obviously a broad class of product which you're allowed to do, but then it becomes specific if you tell them that there's a shop 3 doors away, why don't you buy that in your super fund? That would be a total no-no. That you'll not be able to do, because that it becomes a advice to the retail client. So what certain general advice does not attract remuneration. So this basically what you're saying is, when you have these kind of conversations, these broad asset class conversation, you're just not charging a fee for it. And the advice is not about a particular financial product. It's not personal advice, and you're not trying to influence that person. You're not trying to recommend that that's what they should be doing, and it should be be given just as a general conversation. And you must tell them that I'm not going to charge you for that advice, but I can talk about the tax implication about each one of them, but I'm just talking about, and I'm not charging you to give that advice. So it's just not a personal advice. It is not considering your personal situation, and it is just an open discussion about a certain broad class of assets. So you can talk about certain characteristics of a public offer fund or self-managed super fund or a defined benefit fund. So you can talk about differences, you can talk about advantages and disadvantages. So, but you must be very careful on how you portray the advantages and disadvantages. But you can't talk about that, a certain public offer fund has given a better return, because the past performance is no proof that what is going to happen in the future. So you can't talk about that there's a certain fund which has performed very well, or a client must infer, or he thinks that you're going to recommend them a certain fund. See, it's not about only a rollover from MLC or AMP or Westpac fund into a self-managed super fund. It is also, the legislation also talks about moving fund from, say, Suncorp to Westpac or Westpac to AMP, things like that, or BT or whatever. So it's a rollover not only from those funds into a self-managed, but from one fund to another. Accountants cannot give any personal advice. That means that you can't do any fact finding. You cannot go into detail of every person because you're not licensed and you don't know the personal circumstance of each client, and you're not entitled to even find out how much money you would need to retire and things like that. But when you're providing this general advice, make sure that you don't charge a fee for that, because if you charge a fee, then it will be considered that you're taking, you're actually dealing in a financial product. Now, what this means is that if the accountants are not licensed, that means that you cannot, consider or advise on all self-managed super fund issues. So there is some limitations on what you can legally do, and you cannot give comprehensive recommendations. So you have certain limitations, on what you can talk about or not talk about. So the obvious thing would be is that if you do want to get involved, then obviously you will need to do the education requirements of the dealer group, or you can get your own license, and I'm going to talk about that also. But there is no stoppage. You can continue with factual advice to ensure compliance, that your clients doesn't breach the SIS Act. So you can talk about in-house assets, you can talk about SG contributions, but you cannot talk about how much contribution a person should make into a self-managed super fund. So you can talk about that, because your company has paid you, say, 50,000 super, you must pay 9.5% concessional contribution. That is what you must say, because that is the tax consequence. Otherwise, there would be penalties, so you can talk about, if a client says, what will happen if I sell this property which is in the super fund. So you can talk about tax implications, what will happen in buying or selling shares, what you'll get 1/3 discount and things like that. As far as operational duties are concerned, there's no problem. If a client instructs you to set up a super fund, yes, you can do that, but you must not influence that decision, and you must not contribute to that decision making. That should be very, very clear. You can change the structure. So let's say the client comes and says, my son is 18 and I want him to add up, I want to add him as a trustee. Then obviously and then the client will say, can you please do the paperwork? Yes, you can do that. You can do the accounting functions, the audit of the super fund. You can prepare accounts. You can lodge tax returns. So all that continues. Nothing changes there. Now, you see, when I said, just going back, that you're limited, your advice, provide comprehensive recommendation, because, setting up a super fund involves a lot of things. There are a lot of things which a client should consider. These are only a few of them. They should be prepared to take control. They should be aware of their legal tax obligation. They should be responsible where the money will be invested. They should be aware of the restrictions, and they should have enough money to establish a super fund, because ATO and ASIC has been talking about 200,000, and they said that you can't get enough diversity, in the investment mix if there's less than 200,000. Although they haven't put a legislation through to say that this is the amount which you must have. And I mentioned that there are 7% funds which have only 50,000 or less. Now also, they should be able to allocate time and skills, and you would have noticed even in your portfolio of clients, there are some clients who should have never set up their super funds. So you should be actually uh, uh, you know, one more thing, you can't even talk about that you should close your super fund, and then from 1st of July 2016, you should close your self-managed super fund and put money in AMP. You can't even say that anymore, because you're not licensed to do that, because you're trying to tell them to roll over from one fund or even wind the fund. You can't tell them that, whether that is good for them or not. One thing which is not never discussed as in by an accountant is that once you have a self-managed super fund, the access to the tribunals, to the complaints tribunal, basically finishes off. So, if anybody runs away with their money, they have no source of complaining to anyone. So they should be very responsible. So before anyone actually should recommend a self-managed super fund, they should actually fact find whether the person is a responsible person and he understands. And then once we have that kind of an understanding of that person, only then they can recommend or not recommend setting up a self-managed super fund. Now, what is your option after 1st of July? You can get a limited license. Now, when you get a limited license, that means your own license. That is, your firm has have their own license. You don't have to become an authorized representative. But the other option is that you can go to a person who's got a license, and then you ask them, "Can you authorize me?" And that person could be a dealer group, and there are lots of them out there, and that dealer group should say, yes, I can authorize you, but are you educated? And now we're talking about RG 146 and whether those qualifications are there. And then that person may ask you for a fee, and they will tell you how many CPD points you need, and they may ask you that you may have professional indemnity insurance and things like that. But if you have your own license, there are certain benefits. You can control your cost, you are independent, you can have your own brand. But then there are disadvantages, there are infrastructure, there's cost, and then you have to do your marketing, and then you have to do your own compliance. Now, what is a limited license? Basically, you can be licensed for so many things, and the product can be. These are just a few of them. Established super fund, contribution, advice on pension. These are the things you will be able to do if you are licensed. Now, if you are planning to join another dealer group, you should discuss exactly what you are allowed to talk about, because your license could be limited. They may not allow you to talk about managed funds, or they may not allow you to talk about shares or property. So you have to be very careful, and they may not allow you to talk about certain risk products like life insurance. They're very complex products out there. So you'll still get a very even if you want to be authorized by one of the big dealer groups, they will give you certain restrictions and give you a parameter on where you can talk to your clients about. Now, once you apply for a limited license, again, there would be certain limitations on uh, what the ASIC would allow you to talk to you about. So I will send you this slide. Anybody wants to set up a limited license for their own firm, and then you need to talk about what is the class of product, what kind of advice you want to provide to your clients. Now, capping up with what we have discussed, the regulation 7.1.29, I'm just going to go through some of the scenarios. So the question is, if a client comes to you, can you provide advice to establish or wind up a super fund? So this is a situation, um, the client walks in, says, should I set up a super fund? You as an accountant, you will need a license. If a client comes to you and says, I am with AMP, blah, 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 or BT or this super fund, do you think I should have a self-managed super fund? Now, what that means is you're comparing a self-managed super fund with another superannuation product. This you cannot do. You need a license. If client says, can I switch over from one fund to another? Can I roll over from one fund to another, or one fund into a self-managed? Again, you will need a license. Now, can you recommend an investment product to a self-managed super fund client? Can you recommend a cash management account, say Macquarie cash management account? No, you cannot do that, because for that you will need a license. Can you offer a class of financial product? Can you say banking shares? No, you cannot do that. Can you recommend a limited recourse borrowing arrangement? No, you cannot do that. For that you will need a license, because it's an investment into an asset. Now, certain things, 7.1.293 F and G, these exemptions are: can you arrange a deed? Yes, you don't need a license. Can you order a corporate trustee? Yes, you can. You don't need a license. Now, you should be provided with an instruction. So that instruction should be very, very clear. So what it should say to you is there should be a clear order form. There should be very very strict guideline, and to the whole world. When I say to the whole world, it should be on your letterhead. I don't have a license. I don't provide financial advice. I cannot do all of these things. And on your business cards and on your websites, it should be very, very clear that you don't do all of those things, and the declarations are provided in these sections. Now, can you document an investment strategy? Yes, you can. If he tells you that this is what I want, and because it's going to breach, if you don't have an investment strategy, it's going to breach the SIS Act. So you can draft it. You can basically type it, but this is on instructions. Can you implement a LRBA strategy? Of course you can. So can you document? Of course you can. So you're not recommending. So there's a difference between recommending and just implementing. Can you order a Bear Trust? Of course you can. Can you set up a trustee of the Bear Trust? Of course you can, because you are instructed to do that by the client. But can you recommend it? No. Can you process the rollover forms? Of course you can. But once the decision to rollover is made, you can't help in that decision making. Now, can you prepare paperwork for commencing or rebooting pensions? Of course you can. If a client says to you that I want to go on pension, can you do whatever is necessary? Of course you can. That means you order the pension documents for them. And can you tell them what is the minimum amount you need to withdraw? Of course you can, because then you're telling them that this is what you need to withdraw to comply with the SIS Act. So you should be very careful. Now, um, advice as to strategies relating to the fund. Should I take a pension? You can't talk about that. You need a license. Can I roll out, or can I take a lump sum? You say, I don't know whether you should or not, because I don't know your personal situation. Advice in relation to the nature of the amount of contribution. How much concessional contribution should I put? How much non-concessional contribution should I put? So all of those questions you cannot answer till you have a license. Now, can you provide advice in relation to amount of pensions? Of course you can't, because you don't know their personal situation. If they're 55 and 60, well, transition to retirement would finish off very soon. We're just waiting for legislation to come through. But the amount of pension you cannot recommend. Can you audit a fund? Of course you can. Can you talk about tax implication of holding an interest? Of course you can. Like, what happens if I go on pension? So what is the tax implication? Of course you can talk about all of that. Now, accounting functions, you can, you're required to maintain some trustee minutes, records must keep the record for 10 years, prepare rollovers or investment records. You're just basically maintaining a ledger for them, what type of investments you have. Can you monitor pension? Of course you can. Like, if he has not withdrawn the minimum amount, so the minimum amount, say the person is less than 70 years old, he must withdraw 5%, and in the month of June he has withdrawn only 2%, he's 3% short. So you're monitoring his pension, and then recommending that because if 5% is not withdrawn, he'll be breaching the SIS Act. What about contribution monitoring? Of course you can do that. Like, if he crosses a certain limit, or if he says, I want to salary sacrifice $40,000. So what you can do is, you can't say whether it's good or bad. All you can do is, you can tell him that because you're over 50 or above 49, the limit is 35, the 5,000 will be added in your income, blah blah blah. So you can talk about the tax consequences of that non-concessional contribution, but you can't tell him that, sorry, you can't contribute or you should not contribute more than 35. That would be wrong. Can you track account balances? Yes. Investment valuations? Yes, because let's say the super fund is going to sell an asset to, let's say, a residential property has to be sold to a member. Of course, you can organize valuations for them. And if a client tells you, can you sell this asset for me? Of course, you can organize that for him. So that would mean, let's say, under instructions, the client tells you to sell in the market, certain shares or certain interests which the super fund owns. Can you prepare tax returns? Of course you can. Can you audit a fund? Yes, you can. Can you review compliance? Can you update the trust deed? Of course you can, because you can review the deed and say that there are certain things which you are going to do. Let's say the deed is prior to 2007, and then the client wants to go into transition or retirement, and the deed does not permit him to do that. So you can review the deed, and can you update it? Well, once you review the deed, you will tell the client that you cannot do that. You will need to update the deed. So the client has to instruct you to update the deed, and of course you can order an update. And then you can review the fund with legislation. You can look at SIS Act, and you can look at the fund and say, whether it complies or not. So prepare or review an investment strategy. No, you cannot do that. So how much has to be invested where? That is all regulated by regulation 7.1.33a. And how much should be invested in what class of asset? Of course, you cannot do that because you don't have, sorry, let me just repeat. You cannot recommend any investment class because you don't have a license. Contributions, how much to contribute, type of contributions. Uh, you know, uh, Another type is, say, a client has a self-managed super fund, and let's say he works for Telstra, and the client asks you that my employer Telstra is contributing 9.5%. Should I ask him to contribute that into my self-managed super fund or into the Telstra fund or into the Telstra fund? You cannot give that advice because for that you will need a license. Now, factual information, again, in-house asset, investment restrictions, anything to do with making sure that the fund complies with the SIS Act is all fine. Cost savings, if they have several funds, you can tell them that you should have one fund, but which one fund you cannot talk about. Now, let's look at a real life situation. You have a client, and client knows that he wants a self-managed super fund, and the accountant, he knows the accountant can provide the following services. He can establish a fund, assist in rollover, provide factual information regarding SIS Act. You can prepare accounts, you can value the assets, you can help them in preparing a pro forma investment strategy to just say generic, but just on with broad class of products that you should invest in these kind of assets. And you can advise on tax implication of pensions and prepare pension documents. So you can do all of that. But you have to be a little bit careful, and you should look at the advice which the CPA has also provided on their website. He says when you're dealing with a super fund client, when you're being asked to roll over, there's a situation where there could be lack of insurance. So you should discuss it with the insurance, discuss this insurance with them and say to them that you must go and see someone who's licensed. And you should always, the solution is to have a disclaimer in place. And where should you have your disclaimer? You should have your disclaimer on your letterhead. You should have your disclaimer on your business cards, and you should have these disclaimers on your websites. Now, if you have on your website, I can set up self-managed super funds for you, and you're not licensed. That is what ASIC is looking for. So first thing what you should do as soon as you finish with this webinar is look at your website. What does it say? Does it say, can I set up your super fund? And if it says that, and if you're not licensed, you're in trouble. So talk to your IT guy, make sure that is removed. because you cannot set up a super fund. You're not allowed to set up a super fund. You cannot assist a client in setting up a super fund. But you can say that I'm not licensed. I can set up a super fund if you tell me to set up a super fund. But I don't set up a super. I cannot give advice in setting up a super fund. So you have to be very, very careful on how your website or what is written on your website. Please make amendments as soon as you can, because there should be evidence that these instructions are given. All these instructions are given. You must maintain file records, any correspondence, with the client, that should be documented. Because when you go to court, they're going to take your license away. They're going to they're going to take away your tax agent licenses and all of that. So you have to be very, very careful on what you document and how you document it. And you should be very careful, and you should limit yourself, if you don't have a license and you don't intend to get one, that your role and your engagement should be very well defined. It should be very, very clear on what you're going to do. Now, what we have done to help accountants is we have a website, and what you can do is on your website. The website name is smsfdeed.com.au. So what this website does is you can have a self-managed super fund trustee, and if you want, you can have a corporate trustee on the same one application. And while you're filling up the form, it can also uh, apply the APN for the fund, so you don't have to go to ABR website and do the entry again. All that would be automatically done for you, and it'll also apply for the tax file number, and these are the prices. But what we can do is, I want you to have a look at the website. Is what it can do is it can actually integrate with your website. So the application form. So this form, this bit will be yours, and the bottom bit, this form and this will be bottom bit will be yours, but this actual form can be planted on your website. So what you can do is in your uh, in your uh, in your website is you can tell your clients that cost of first year administration is $1,500, including setup, and click here and you can set up and or give me an order now, or click here to provide me your information. And when they click there, then this online application opens up. And then once the visitor of your website fills up all the application, you can actually collect money also. So let's say your fee of say $2,000 for the first year, which includes the individual trustee, or $2,000 plus ASIC fee, 2,500, say for example, with corporate trustee. So this application form, so the order is actually given by the client and on your website. So you don't have to go and order from a separate website. So instead of telling the client that you must give me an order, the application form can actually be online. So this is a very effective tool. I request you to have a look, and we'll be talking a lot about this website from now on, so that accountants, those who have decided not to get licensed, are able to continue helping clients on instructions to set up self-managed super funds. So I'm mostly done with my presentation, and I can see some of you have some questions, and most of them are requesting this slide. Please allow another 10 to 20 minutes, and it'll be my pleasure to send you the slides. I'm just looking whether anyone has asked me a question. I think most of you just want a copy of my slide. Uh, I can. I'm just looking for if there's any question being asked. Uh, yes, Michael Hanna. I'll send you the Sebastian, James, uh, Greg. Yes, I'll send you the slides. Abdul. Superfund setup. If a disclaimer engagement is a letter signed by trustee, is it enough? I would say that there's a disclaimer which you present to him before you start talking to him. and that should be your file note. That is, you have, and that is proof that you have actually, mentioned that to the client. Saroj, I'll send you the file. Irani, I'll send you the file. Uh, yes, Irani has said that they've downloaded the CPA guide. I think that's a good way to start. And they have also mentioned, CPAs help their members in saying what has to be discussed and what kind of so execution only services, however recommended services are only provided if the client has already received. Yes. Now that's Irani, you're quite right. That is what the CPA says. That what they are saying is that if a client tells you that I want to set up a super fund, don't just go ahead and set it up. What you should say to the client is that I think you should go and talk to someone who's licensed because I'm not licensed. So those who are members of CPA and CA, I think it's a joint declaration by them that this is what you should do. Well, that's what your clients, that's what CPA wants, and in your annual review, probably they would be talking about that as well. So there's a question by Irani. Can we use third-party service provider to set up super fund if the client approach us asking to set up a super fund? Yes, you can. And if you look at this website, so if this website is on your website, if it is integrated with your website, and your website should be clearly talking about that I am not licensed, but if you want to order, I can do accounting. And if you instruct me to set up, my fee is say $3,000 including the setup. So here it is. Go online and order it now. So yes, you can order, you can put this online application, or you can put any, you can create your own online application for your client if you like. Now Sue, yes, I will send you the presentation. Marie, yes. uh, Okay, there's another question by Thomas. Can you advise on minimum and maximum pension payment limits for market-linked pensions? Yes, you can do that because you're just giving them the tax implication and the consequences of if they do not follow the SIS Act. So in my opinion, yes, you will be able to give them the minimum and the maximum amount. All right, so I guess everybody just wants the slides. This presentation is being recorded, and very soon it would be on our website and the slides will come through. If you want to provide training to your staff, it would be very soon available on our website. I am available to discuss if you want to have one-to-one conversation. Feel free to call me, the office on trustdeed.com.au. The phone number is 968402 9684 4199. Thank you for your time. Bye for now.